That is not only more than 3 times as much as in the previous year, which was dominated by the corona crisis, but also the highest level in 14 years. As the economic crisis fades into the background, the number of purchases increases. In July, there were 7 times as large as in the same month last year. The most prominent case is also the most turbulent. A bidding war has been raging around Morrisons, Great Britain's fourth largest supermarket chain, since June. The American private equity investor Clayton, Dubilier and Rice is arguing with a consortium led by the Fortress Investment Group, an offshoot of the Japanese SoftBank. Fortress's final bid is £6.7 billion, that's $9.3 billion. CD&R can add more. Analysts speculate that US giant Amazon could also get involved. Less conspicuous, but no less substantial, are the takeovers that take place outside the limelight. Meggitt, a British manufacturer of aerospace technology, is said to be swallowed by American machine builder Parker Hannifin for £6.3 billion, that's $8.8 billion. But a counteroffer from US aircraft supplier TransDigm was announced on Wednesday. The construction company St. Modwin goes to the American investment company Blackstone, the infrastructure developer John Lang to the US investment company KKR. The list could go on and on. The wave of takeovers is never ending, commented the broker Liberium. Buy-ups are traditionally mostly observed in medium-sized and smaller companies. In the FTSE 100, the leading index, which includes the 100 largest British companies, only 0.2% of the market capitalization has been affected by such transactions annually since 2003. In the broader FTSE 250 index, with the next 250 smaller companies, the value climbs to almost 6%. In the FTSE Small Cap Index, with the following 270 companies, it's over 7%. The interest shown by private equity firms is particularly noticeable. These vehicles collect capital in order to build majority stakes in undervalued companies and to bring them on a more profitable course. This can also be done by remodeling or selling parts of the company, which is why their reputation is not the best. You might know the movie Wall Street. They struck up nearly $50 billion in acquisitions of British firms in the first half of the year, the highest since data collection began in 1996, according to Refinitiv. Analysts see the reason in the low valuation and in the environment. British companies are quite cheap, especially in comparison with the USA, for example in the terms of the ratio of share price to earnings per share. First of all, Brexit uncertainty weighed on valuation for years. Then came the corona pandemic, which hit the British economy particularly hard in an international comparison. In the meantime, the Brexit environment has been clarified. The political situation is, well, officially stable, and the danger of new far-reaching lockdowns have largely been averted. Financing the transactions is no problem for the investment companies, thanks to the ultra-low interest rate environment. Private equity firm TDR Capital completed the purchase of Asda in February, ahead of Morrisons as the country's third largest supermarket chain. TDR and its partners brought in only £700 million of their own capital into the deal, but took out £4 billion in loans. Great Britain has traditionally been market-based and open-minded. Mergers and acquisitions usually do not provoke widespread opposition or warnings of a land sell-off. But the flood of buyers from abroad is straining patience. The conservative and market-liberal newspaper Daily Telegraph asked in a comment at the beginning of August why British companies were so seldom interested in the domestic takeover targets. Why don't they see what everyone else evidently recognizes, so the tenor? For example, why isn't Sainsbury's trying to buy the second largest British supermarket chain, Morrisons, after Tesco? The answer could also lie in competition concerns. 2 years ago, Sainsbury's burned his mouth badly when the company tried to swallow Asda, and the competition watchdog blocked the transaction with a crystal clear warning against too much concentration. If there are two domestic parties, the risk of a dominant position is greater than if a foreign party is involved. Private equity investors are not immune to objections either. Last year, the US investor Advent bought the British defense company Cobham. Now, Cobham, newly controlled from America, has presented an offer for its British industry colleague Ultra Electronics. This is testing Johnson's administration for national security concerns. The government is also looking closely at the takeover of Medjed, and a $40 billion transaction was announced almost a year ago and is still waiting for its place. The purchase of the Cambridge chip manufacturer ARM by the American Nvidia has to be approved around the world. Most recently, it was said that the chances of approval in Great Britain were poor. It's not just money that can make shopping trips fail. And it's a very interesting topic, and that's why I picked it, even if I know not the majority is interested in stuff like that. But it is a very interesting and very symptomatic one. And I'll see you in my next video. Bis gleich.